Yo, what's up, fam? Another day, another dollar. Today, it's time for ServiceNow. ServiceNow is an IT service management company, a SaaS company based in the Silicon Valley, headed up by this guy called William McDermott, and they absolutely dominate the ITSM space. You guys have probably heard of Jira, so incident management, task management, etc., ticketing. ServiceNow is actually the leader in that space. So they have an out of the box solution, and ITSM revenues account for 75% of the total revenues. Now, they've always come up with rock solid earnings, and they track this metric called remaining performance obligations that gives you a little bit of an insight in what the quarter is going to look like in the future. It's always grown, and they've always shown a steady trend of adding high value customers to their book. So, their book of business, which really matters in the SaaS world. Now, since I come from the SaaS world, I'm able to make educated estimates about what their quarter is going to look like and what their future is going to look like. So, talking about that and talking about Q4, this is what I expect Q4 to come in at. What happened in Q3 though? In Q3, they came up with good earnings, the stock increased, and it's actually been on a bit of a tear. This stock is very sensitive to interest rates, as because of the fact that this stock is pretty overvalued, moderately valued, whatever judgment you might make of it, but it is sensitive to interest rates. The Feds do talk about interest rates today, although everyone expects them to hold rates steady, but that is a little bit of a consideration you should make. Now, in the last few days, the trend, and we're talking about technicals, the technicals of ServiceNow have actually been pretty solid. The deep seek saga has been a good guy for companies like these because this is supposed to be a cost good guy for companies that use large language models such as ServiceNow has really embraced the AI story, and they actually have agents that will perform tasks for you as well. So they really need to get pinpoint accuracy with the AI story and how how well the AI tools are integrated into their overall platform, because these agents are actually taking decisions for you. I expect the stock to actually perform well, but you probably can't tell where the stock's going to go just because of the fact that this stock has experienced a lot of increase over the last few days and over the last quarter. But this stock is also at a point where they really need to split this stock. It's at $1,145 when I checked it last today, and their institutional investor percentage is at 90%. If you look at their volumes and you compare them to some other stocks, their volumes are actually a little lower. And so they would actually really benefit from splitting the stock. Whether they will split the stock or not, or just float the idea or say that, hey, we might take it to our board and see what they say, we don't know that. But speculation, but it is a bullish speculation. So I really do expect the stock to do a little well, probably climb by about 5%, 7%. But if it falls, this could be a really bad thing. Now, how do you actually enter a trade for a stock that's at 1145? That's the real key question right now. Well, I have a trade for you guys. It's called the collar trade. What you do in the collar trade is you take three steps. Number one, you buy 100 shares of that stock. Number two, you sell calls against these shares. Number three, you buy a put for the downside. I'm going to walk you through these one by one. So I've got this working for you guys. Okay. The stock's currently trading at 1140. So it's actually fallen. 1145. So let's just assume it climbs up to 1145 for the sake of this conversation, because I have this spreadsheet set up already. The implied move of the earnings is about 6.9%. This is a simple calculation. So it's supposed to be going up by about $79, give or take, up or down. Okay. Now, say it goes up. Number one, you bought these shares at 1145, so 1000 1145.5 k you spend. That's a lot of money to spend, I know. And so you really need to look at your buying power and things of that nature. Make sure your account doesn't get blown. Number one. But you sold the call for this week straight away. So I pick something that's 5%. So I assume that the stock will go up by 5% in my first scenario. So I sold a call and I collected $1,600 in premium, 1,660 to be exact. I also bought a put to the downside. So I expected that let's just say the stock actually goes down to by 5%. I bought a put worth 800. So therefore, I spent 800. My net gain from this only doing this is about $860. And I then the stock then actually ended up. So what actually happened? The stock actually ended up going up at the end of earnings, and it blew through my short call of 1200. It actually ended up at 1224. Okay, I've lost a little bit of upside in this $20 per stock, but I just closed at a profit of $6,500. So this is a case where you limit your upside, but you really protect yourself against downside. Now, let's just say that the stock actually moves down. This is not a good scenario. So I picked, hey, the stock goes to 1066 because this happens to be minus 79% of that particular implied volatility downwards move. Well, I still sold the call for 1200 and I collected that 1600 premium. This is where it gets interesting when it goes down. Long put, so I paid that $800, but because of the delta and the theta on that particular option trade, which is the put that I bought, I benefit from the downward movement. So my net gain is actually $850. Now, I am still stuck with these 100 shares that are now underwater if you just compare it to the cost price, but that's not your cost price. Your cost price has actually improved by these premiums that you've actually made. Now, what do I do with these 100 shares? These 100 shares, I can roll it to next week because I have these 100 shares and the stock just dropped by 5%. My implied volatility has actually gone up in the short term. So I've collected, I look at my option book for next week and I say, can I collect an in the money premium for this stock? What is that price? $4,000. What did I net out at? $1,600. This is a collar trade, and so this protects you from being underwater even if the stock falls, and in this case you're buying high, selling low. This is a collar trade. Follow me for videos like these and videos related to stocks and cryptos. I'll see you guys around. Happy trading.